FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
This episode of the Financial Survival Network is brought to you in part by Sandstorm Gold Royalties. Sandstorm Gold Royalties is a different kind of gold company. They purchase royalties on select mining operations and receive a percentage of the revenue in return. Sandstorm now has a portfolio of over 185 gold royalties around the world. See how gold royalties differ from other gold mining investments at sandstormgold.com. That's sandstormgold.com. Sandstorm Gold Royalties trades on the TSX as SSL and on the New York Stock Exchange American as SAND.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz. It's 10/24/18. Year is almost shot. Just a little more than 2 months to go. Well, what's going on with the trade war? What's going on with interest rates? A lot of other topics to discuss with Jordan Goodman, moneyanswers.com. But first, as always, write us, be a part of the show. KL@KerryLutz is the email address. Well, Jordan, welcome back, and lots happening.
Absolutely. Great to be with you again, Kerry. You bet.
So first, interest rates. Is it going to kill the goose that lays the golden eggs, or what's it going to do?
It seems that way. I mean, the Fed seems to be on a path to raise rates no matter what the markets do or what the economy does. They want a so-called normalized rates. Mm-hmm. They've raised rates 3 times so far this year. Very clearly, they're going to raise rates again at the December meeting, and probably 3 more times next year. It's already slowing the economy, particularly in interest-sensitive parts of the economy. Housing is definitely slower. Car market is slower. The banks are getting hurt. So it's definitely having a negative impact, and the Fed just doesn't seem to care. They just want to get their rates back up no matter what the impact is. So both long and short-term rates have been rising. Short-term rates, I mean, the 2-year Treasury's up to like 2.9%, almost 3% these days. And the Fed's going to keep raising short-term rates. And the long-term rates are up to 3.1, 3.2, something in that range. You have fewer demand. You have less demand because the Fed is not buying as much treasuries as it was before, and the Chinese are net sellers instead of buyers. Right. And you have more supply because the deficits. We have these huge auctions coming all the time. So that in itself puts upward pressure on interest rates. So yes, I think rates are going to keep rising, and that is hurting the stock market and the economy.
So Trump originally, when he was a candidate, said we need higher interest rates. We need interest rates to be normalized. Now that he's president, he's singing a different tune, isn't he?
That's for sure. I mean, no president has criticized the Fed as openly and often and directly as this. They may think it, but they don't normally say it. And it's going to have the exact opposite impact. When he criticizes the Fed, they have to show they're going to be even more independent, and therefore they're more likely to raise rates faster rather than slower with all the criticism he's been leveling at them. So, it's just totally counterproductive.
So you do know, though, that once interest rates start going up in a recovery and an expansion, inflation goes up as a result as well because banks start lending again. Banks really haven't been lending very much for the past 10 years since the crash. You think the bank lending is going to be upped now that they can earn a higher return?
A little bit, but the lending standards are still very high because of Dodd-Frank. I mean, in mortgages, you try to get a mortgage today, Kerry, and it's a whole long process. You have to prove everything much more than in the past. And small business loans, it's still difficult to get small business loans. And loan demand has not been that strong either, frankly. So I think the banks have tons of money, but they're buying treasuries. If they can't lend it out in ways that meet their criteria, they're just buying treasuries. So I don't think loans are going to go up that dramatically.
So what do we need banks for then? If they're not going to loan money and be an engine of growth, they're supposedly the purpose of the banks, they were financial intermediaries, and they were there to allocate capital to help an economy prosper and grow. But it seems like they don't really do that anymore. The only lending they want to make are secured lending for cars and government-backed lending for housing and for education. But outside of that, they don't really want to, they aren't in the loan business anymore.
You're right. They're not, they don't want to take risk. They got burned so badly in 2008 and 2009, and then the regulations after that, but they're not in the risk-taking business. But what that's meant is a whole new class of lenders have come along, the fintech lenders, peer-to-peer lenders, for example, like Prosper and Lending Club is one example. Even in the subprime space, there's a lot of players, hedge funds and others that have come into that space to now lend that the banks are not doing anymore. I would agree with you. The banks are not lending the way they really should be, specifically considering the amount of bailout that they got of hundreds of billions of dollars, and then they're not putting it back into the economy.
Yeah. So again, I go back to, what do we need banks for?
They make money but by buying treasuries, basically, and they pay investors or savers nothing. That's what's ironic here. The Fed's raised rates several times. The banks immediately pass that on in higher rates that they charge for credit cards, student loans, car loans, all those kind of things. But they do not pass it on to depositors who continue to earn well under 1%, in many cases 0%, on savings accounts, money market funds, CDs. There's a new class of online lenders that have come out that do offer yields of 1.5% to 2%, but the banks feel they can get away with it, and so they do. They just keep paying people nothing, and as long as people don't complain, most people don't. The higher net worth people are moving their money to some extent, but most people just don't complain and take it. And banks can get away with it, and they do. If you need to earn a decent yield on your money today, Kerry, you got to do something different than keeping it in the bank. Because if you keep it in the bank, you're basically losing purchasing power. Now, officially, inflation is 2%. I think in real life, it's way more than that. You see what's happening with healthcare premiums, with tuition costs, with energy prices, with taxes, in many cases, property taxes and other things going up. I just think the real life inflation is much higher. You got to have your money earn something for you if you're going to keep up with all that.
Yeah, I would say definitely so. And, you know, these banks are really just become parasitic entities, really don't do a heck of a lot of good. And you know what? They say, well, hey, you deposit your money here, it's insured by the government, by the FDIC. So is that worth the difference in the returns that you get there and
I don't
elsewhere?
think so. I mean, it's insured against loss, but it's not insured against loss of purchasing power, which is really what the problem is. I mean, I'll tell you what I'm doing with my money, if it might be helpful to some of the listeners, as a way of getting a decent yield without principal volatility. I'm doing what are called secured real estate funds, where you get an 8% yield over a 1-year time frame. The principal doesn't go up or down, stays at $10 a share net asset value. And you get monthly checks if you like. You can compound them and reinvest them if you like. They're lending money short term to commercial real estate projects all over the country. A website they can find out about that, securedrealestatefunds.com. That's the kind of alternative that's out there today, allowing the average individual, minimum $5,000 for that, by the way, to get a decent yield instead of keep it in the bank earning nothing.
Yeah, got it. Makes a lot of sense. And, a little bit, perhaps a tiny bit more added risk as opposed to holding it in the bank, but much more gain. What did you say they're paying now, those funds?
These secured real estate funds are now paying 8% in interest. And actually, they get a little extra profit sharing on top of that. When the projects that they lend are ultimately sold, they share some of that profit with the fund shareholders. The actual return this year, so far through September, is 8.36%. You actually get a little bit more on top of the 8%.
Nice. Hey, well, one thing you got to be concerned about, though, at this point in the cycle, it does appear that real estate is peaking, both because of the interest rate hikes and the age of the cycle.
I think that residential real estate is peaking. Commercial moves much more slowly. It didn't have as big an upturn. I don't think it had as big a downturn. So this is all commercial real estate projects they're dealing with. But I would agree with you that in the super hot cities like Seattle and San Francisco and Austin and other places, they're definitely the higher interest rates. We now have over 5% mortgage rates has definitely taken the steam out of the housing market that had just gotten too super hot.
Yeah. So trade war. What's going to be with the trade war?
I think we're going to have a long-term trade war. I don't think there's going to be a kind of quick resolution. Now, I have to give you credit. You said that Canada would fold, and they did. So
and
you
Mexico.
were right on that.
And Mexico.
But it's a different power situation. We have much more leverage over Canada and Mexico than we do over China. We do have leverage over China, and we're hurting them. But they also have leverage against us in various ways. And I just think it's going to be a long-term trade war standoff. By the end of the year, we'll have tariffs starting January 1st of 25% on everything coming in from China. And China's going to have tariffs of 10 to sometimes even as much as 70% on everything coming in from the U.S. And I just think it's going to kind of stay that way. And there's not going to be some big break where all of a sudden tariffs will come down and the Chinese give us what we want. I wish it would happen, but I don't think it's going to happen.
Well, I will beg to differ with you because China is seeing decelerating growth. They're claiming that it's 6.5% annualized growth, but we know that's not true. It could even be negative at this point. And I will tell you that that they don't know how to handle Trump. They don't know what to do. Look, they imposed 25% tariffs on soybeans. And you know what happened? It's like they went to look for soybeans in the rest of the world and said, uh-oh, there isn't enough to feed our hogs and our cows.
Correct.
And now they're back to the U.S. And a lot of what they buy from the U.S. is going to be that because they don't want manufactured goods from the U.S. They only want raw materials. I go back to it and people laugh at me, Jordan, but I think the tipping point was this for this trade war was when China said, we don't want your garbage anymore. And they stopped taking our scrap.
Literally garbage, yes.
Yeah. Right. You know, basically corrugated paper boxes, cardboard boxes. And that was like one of the, I think it was the 5th largest export of the U.S. was garbage to China. And I think that was a tipping point. You know, they might have had very good environmental reasons for doing it, maybe even economic reasons, but that was it. And I mean, the nerve of them, but evidently there's other countries that want our garbage, so let them have it.
Oh, good.
You know, Thailand evidently.
You're right. It is really hurting China. I mean, our stock market's been down lately, but their stock market's been down a lot more, 20, 25% so far this year. And they're very much more of an export-oriented economy than we are. And this is really, really, really hurting them. But they don't have midterm elections. They don't have to kind of worry about popular dissent as much as we do. And I think they're going to tough it out. Now, maybe there'll be some moment of clarity, and they say, this is going to hurt us both too much, and we'll lower tariffs and give Trump some of what he wants, and it'll all be great. That would be very, very bullish if that were to happen. But my prediction right now is that's not going to happen.
I will beg to differ with you. I think cooler heads will prevail.
I hope you're right, Kerry.
I think it's a lot of it is this theft of IT. Of IP, intellectual property. And they've been doing it for years and years. They've basically been screwing the U.S. for a couple of decades now, and enough is enough. And they'd like the good times to continue on. But at some point, there will be a realization that things must change and that they're going to have to change the model of their economy and maybe even the whole concept of these state-run enterprises is going to go out the window. They're just not going to be able to afford them. They're burning through a lot of foreign reserves right now, which in the end, there is going to be, I'm going to tell you exactly what's going to happen because no other president that we've had, except perhaps Bush 41, but for different reasons, really understood the Asian mindset. Trump has studied Sun Tzu and much other literature out of the Far East, and he's got a better handle on how those people work, how the societies work. And I don't mean that in a negative sense at all, but the way of saving face. And the most important thing isn't that you screwed up. It's that you not get humiliated for screwing up. That's the way it works in the Far East, because everybody screws up. It's just human nature. But in Asia, in Japan, in China, maybe to a lesser extent in Korea, I don't really think they're as much into face as China and the U.S. I mean, China is still upset over the Boxer Rebellion and the Opium Wars. And you know how long ago that was. So Trump gets
but I guess
that.
my question, Terry, is how can we come to an agreement? And I agree with you completely. They're stealing our technology and our intellectual property and all that and state-owned enterprises. But how can they change that and not make it look like a concession or they're weak or they're losing face? I mean, if there would be a solution for that where they can save face, then that would be
there will
good,
be.
Right? I don't see how that's happening.
I don't know.
Trump is in their face.
He's in their face, but he's not gone full throttle with the hyperbole that he would when you were talking about the Democrats or something. He's just gone to the point where, hey, it's not fair. We're not going to take it anymore. And that's that. He hasn't ascribed evil motives to them, even if they might have less than noble motives for their mercantilistic system. It's a dance here. You got to look at it as a dance. China wants something, even if they don't even know they want it yet, but Trump knows that they want it, and he's going to give it to them to get what he wants. Yeah. Trust me, this thing will go maybe to February or March, if that, but I seriously doubt it. I think it could be settled by the end of the year. They're talking, so they say they're not talking. When they say they're not talking, they're talking. Something's going to happen. But hey, so what about the midterms? We going to have any effect on the Trump economy from the midterms?
I think to some extent they will. I mean, if the Democrats win the House, then they'll do all kinds of obstructionist things, and they're going to clearly start impeachment hearings. And I think it's likely, depending on the size of their majority, that they would impeach Trump, particularly when the Mueller report comes out, and that he will not get convicted in the Senate. And the whole thing will be an enormous media sensation coming to no effect in the end. Yeah. So that's kind of likely. I mean, they're talking about tax cuts. All the things that Trump wants are not going to happen if the Democrats take the House. So, but to some extent, Wall Street's saying, we've already got what we want. We've got the tax cuts. We've got the deregulation. Just stay out of our way and we'll do what we do. And the Democrats may complain, but they're not going to be able to reverse the tax cuts or reverse the deregulation. So to some extent, gridlock isn't the worst of all possible outcomes.
Yeah, well, hey, I would just voice my view. I don't believe they're taking over the House. I believe that the polls are whack, as some might say. I think the polls are whack, and I think that the whole Kavanaugh thing galvanized the party. But more importantly, the same people, the same polling organizations who assured us that Trump had not a prayer of winning the presidency are the same ones telling us now that he's immensely unpopular, which I don't believe. He's definitely unpopular with Democrats. But people in the U.S. have always been pragmatic, always voted with their pocketbook. There's no reason why they would vote otherwise here. Hey, I'm the biggest economic skeptic on the planet. You know that, yes, Jordan. And yet I have to admit that employment is much better. True, workforce participation rate has declined, but I think that's more a result of baby boomers being able to finally retire after 10 years of the Great Recession. I think that the numbers, just even if you don't believe the U1 and the U6 and all that, you have to believe new claims for unemployment insurance just keeps going down. And
the so-called JOLTS report, which is the number of jobs unfilled, recently went over 7 million for the first time ever. So there's a tremendous amount of jobs because the baby boomers, as you say, are retiring. Mm-hmm. And a lot of millennials and younger people don't want to take the jobs that these people had. So there's a huge, I think it's going to be rising. That unfilled jobs could go to 10 million. I mean, we could have a huge number because every day more and more baby boomers are retiring from these jobs. So that is a sign of economic health. Although if the jobs aren't filled, that production never gets done.
Yeah, correct. But, maybe we'll get back into a thing where Americans understand that education doesn't end at high school or college, and that it is a lifelong undertaking. And we might see this mass retraining taking place in the economy. I think this is a trend that nobody is seeing, that nobody's aware of, but the internet makes it so much easier, Jordan. Just like you and I are talking now, we're podcasting. hey, we didn't know anything about that. Like 10 years ago, we were, just doing whatever we were doing. The internet's changed everything. Mass retraining is going to be a huge trend for the next decade because regardless, the economy goes up, down, sideways. We still have a huge number of jobs that need to be filled, and they're going to have to come from someplace. I don't think the caravans are the solution to America's employment crisis. It's getting to where it could be a crisis, of not having enough workers.
Particularly because the amount of debt that people are taking on to go to traditional schools. They just don't want to do it anymore. I mean, we're seeing people graduating with an average of $39,000 in student loan debt. It's just crushing them. And they're coming out with a liberal arts degree,
in
which
puppetry.
is nice, but often they just don't have the skills to meet the jobs that are available out there.
Yeah, they don't have any skills because they've learned about womenism, humanism, menism, social justice warrior for fun and profit. That's not really a career unless you want to be president one day,
Right. So just to help people for a moment, if they're in that circumstance, people don't realize that you can refinance your student loan debt to much, much lower interest rates. Instead of 5, 6, 7% or 10% plus on private loans, you can combine them all into typically 2 to 3%, something in that range. There's a place called Credible that can help them do that. Credible.com/money answers. They get $200 off their first payment that way. Cool. And they have about 10 different choices of places they can go to refinance their student loans. This is the burden of this generation, and that'll help them pay it off a little bit quicker.
Okay. And I think that, I was at my daughter's wedding, and, all 3 of my kids are millennials. And we always make jokes about them being losers, living in the attic or the basement till they can collect Social Security, But I looked at all these kids there, and they were, granted, they might not be from the mainstream, but all of them were successful, prospering, virtually every single one of these kids. They were 30 years old, and they're all, on their way. So, granted, they might not be completely representative, but I think we've besmirched the millennials enough. It's time to start building them up because, like it or not, they are the future, Jordan.
No, I agree. And I have a son that's done very well, and there are lots of people that are doing very well when they get good training and motivation and really know what they want to do. There's just a lot of people that go through college that are not motivated, do not know what they want to do, and they end up working minimum wage jobs and have a huge amount of student loan debt. And those are the ones going back into the basement. So, yes.
But that's going to change. I mean, we tend to look at trends and think that the trend is always going to continue onward, and trends end. And that loser millennial is going to become the winner millennial. And they hate Trump, but in the end, it's going to be Trump who they have to thank. Isn't that the ultimate irony, Jordan?
It is the ultimate irony. Because, if you're graduating now, this is one of the best economies.
Oh, my God.
To get a job for graduates that we've seen in a long time. Compare this to 10 years ago. You graduated in 2008 or 2009, and it was a pretty bad situation to get a job. So you're right.
Yes.
They might not like it, but the economy giving them a good chance is certainly something that Trump has contributed to. Yeah,
and going to the stock market, my personal prediction and the cycle people I talk to, and let me know yours, is this is going to shake off this little decline now. We're going onward and upward, I think, for another couple of years until 2020 after Trump is reelected. Then all bets are off.
Yeah. Well, I think the earnings have still been very strong, and interest rates, though rising, are still relatively low. And a strong economy ultimately is going to produce higher earnings and higher stock prices. It's just people are worried about the trade wars and the Fed Reserve bashing.
It's noise. It's all noise. You can't get distracted.
Right, yeah. And they're worried about the rising deficit as well.
Because
normally at this point in the economic cycle, we should have either no deficits or very low deficits, not rising deficits.
Yeah, that's not noise, and that's a realistic concern that we're just going to have to see how it's dealt with. I think Trump has plans for it, and we'll see about that. I don't know. It's so hard because, it's kind of like... it's kind of like religion, I guess. Everybody wants to feel religious, but then when it's Sunday And it's, I just don't really feel like going to church here. But you want to feel good about being religious. I think that's the way the deficit is. Everyone wants to fight it. Everyone's against it until the vote comes on the budget, and all of a sudden they forget all about it. So, hey, but really, just going back, I think this is unprecedented time. Maybe it's all illusory and we'll just crash and burn like we were going to in 2008 if the Fed hadn't interceded. Or maybe we're really going to see something happen here that none of you expected. And that's what I believe is going to, because look, everybody is always wrong, Jordan, right? When you get down to it, right. Everyone is wrong. People
going into when Trump got elected, people thought the economy would crash and it would be terrible. He would get nothing done. I mean, here he's passed a major tax bill. We've had surging markets for the 2 years, basically. So exactly what everybody predicted is not what's happened. That is correct.
Yeah, and it's a great thing. And that's where contrarianism really comes into play, because, things are never going to happen the way they're expected to happen ever. We've both been around the block a couple of times, Jordan.
Right.
And what you think is going to happen and what actually happens is not what happens. So anyway, I guess we'll leave it at that. Just go make sure you check out Jordan's show. I love his show. It's called moneyanswers.com. And you got your weekly show.
I do. Right? The Money Answers Show. You've been on it as well.
Absolutely.
I interview all the top people in personal finance. I've got lots of resources and videos and a YouTube channel, and I'm glad to get emails. I get emails from your folks all the time, and always glad to help them, Kerry, at moneyanswers.com.
All right. Excellent. Well, Jordan, we'll talk to you soon. Hey, by the way, email us, kl@kerrylutz.com, if you got anything you'd like to know about, questions you want Jordan and I to address. We should probably just do a Q&A show one day, Jordan. And,
that'd be great.
Yeah, and then the Twitter feed is @KerryLutz. Facebook page is Financial Survival Network. Hey, we got to talk next time about the social media titans and their day of reckoning, which is quickly
it is coming.
Not soon enough as far as you and I are concerned. Anyway, Jordan, thanks again for being on.
All right. Thanks so much, Kerry.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.